Hey, Wemberg World Entertainment, and is the saga around Warner Brothers Discovery and its sale to either Netflix or Paramount or whoever, is it actually coming to an end? Because, breaking news, Warner Brothers may back out of the Netflix deal following Paramount's latest offer. Yeah, Paramount have come back in and really upped the ante, and they've come in with this massively improved offer. And by the sounds of things, Netflix aren't all that keen on countering that offer, which, why would they? They didn't have to move from the first offer Paramount put in, which was already bigger than Netflix's deal. But now they've improved their offer, so Netflix is sitting there going, don't know. And now, of course, Warner Brothers, not through the board. Let's put that clear. That wouldn't be through the board that they're going, okay, maybe we should go with the Paramount offer. It would be the shareholders who are the ones that are looking, going, why are you taking a worse offer than what Paramount are offering? But let's have a look at this, because this could be massive. So, multiple outlets, including Deadline, are reporting that Warner Brothers Discovery could announce as soon as tomorrow its intentions to enter discussions with Paramount Skydance about a potential merger. Despite agreeing to a deal with Netflix, the Ellison family's latest offer may be too good for the company, which also owns HBO and DC Studios, to ignore. So this is where they're talking about this improved offer, which apparently has raised the shares in it as well. If you remember, Netflix was offering $28 per share. Paramount had always offered $30 per share, which is what Zaslav always wanted. But then once they offered that, he raised it to 30.1 or something, which was just ridiculous. But now they've upped that offer as well, apparently. So it's saying Paramount's unsolicited takeover offers, all of which have been rejected before now, have caught the eye of many of Warner Brothers Discovery's investors. They've been vocal about the board considering all options, despite there being a signed deal with Netflix. Now, that's what I was talking about at the start, which is the more important end of things is the shareholders and investors. They were the ones who were going to get screwed with the Netflix deal, while the board of directors were the ones going to get these massive payouts. So that's why Paramount went directly to the investors, which they told Warner Brothers, if you don't really look at our offer and take it serious, we're going to go over your head. We're going to go directly to your investors, the people who you actually have to convince. And Warner Brothers were giving so much BS to the investors. Oh, Netflix, trust us, it's a better deal, it's more secure, blah, blah, blah. Even though it was a worse offer, it really did give the investors less than what they would have gained with the Paramount deal. But again, the board of the directors were getting the massive offer, while the investors were getting screwed over. So it looks like it's now working what Paramount had planned all along. So as of now, the streaming giant would acquire Warner Brothers films and television assets for $27.75 per share. That's interesting. So that's actually gone down, because it was $28. So now it's $27. That's crazy. But it was all in cash, which apparently so was Paramount's. So a revised offer after an initial cash and stock deal. Paramount, meanwhile, had offered $30 per share in cash. So you see, that's already where it was weird, that Zaslav wanted $30, but he wanted it all in cash. He accepted the Netflix offer of $27 in cash, while Paramount had always offered the $30 in cash. So the company has also sweetened the pot in a way that emphasizes just how much power and money the Ellisons hold. According to the trade, its latest bid added a new 25-cent per share so-called tacking fee payable to Warner Brothers shareholders for each quarter its transition has not closed beyond December 31st, 2026, which it said comes to about $650 million in cash value each quarter. It also agreed to fund a $2.8 billion termination fee that would be payable to Netflix, and ticked off a series of concessions around Warner Brothers Discovery's debt, financing costs, and obligations. Paramount still has not defined that bid as its last and best offer. So what they're saying to the shareholders and the investors is, we're going to up your price so you'll walk away with $650 million each quarter, and we're already going to cover half of the termination fee with Netflix, because there's that thing that the Netflix deal had in, which was a $5 billion termination fee, which was, if Warner Brothers was to walk away from their deal, they have to pay Netflix $5 billion, which is ridiculous. When, imagine you trying to buy a house and you put in an offer and it's accepted, but if they go with a better offer, they're to pay you back half the money. Like, that's insane to me. But they also want to cover some of the debt that Warner Brothers is facing. So yeah, that's a bit of a too good of a deal to walk away from. So this could all be a ploy by Warner Brothers Discovery to force Netflix into upping its current bid. Either way, it's clear now that nothing is set in stone, despite what any press releases you read might say. Variety has added further clarity by explaining that the Warner Brothers board is likely pushing Paramount into making its best and final offer. That would allow shareholders to make a considered choice, and it would allow Warner Brothers Discovery to push Netflix to match Paramount Skydance terms if they are deemed better than the existing agreement. Now, this is where it's hilarious, because the Paramount deal was always signaled as a better deal. It was always offering more money. So the overall agreement from Netflix to buy Warner Brothers was $27 per share, all cash. But then, well, which is only now all cash, because it wasn't originally all cash. And it was, what, I believe, something like $48 billion or something to buy the company. Whatever the price, I can't remember the actual offer for the company, but it was like well below what Paramount were offering. And yet, the board of directors at Warner Brothers wanted the Netflix deal. Now, the other thing to take in consideration is maybe Warner Brothers, more so the investors, have great concerns over watching one of the Netflix's CEOs at Congress doing the hearing, where he got pushed on a lot of crap and was like, oh, such as the whole thing of, why is over 70% of your content for kids aimed at LGBTQ XYZ www.holyshititsgay.com content? And it's like, oh, so there was all that, and then the woke agenda, all of this stuff, and the dude really could not answer. So yeah, it's very, very interesting to see what is happening here. So look, the reality is, you'd be much better if Warner Brothers could just find the money and keep themselves afloat. But that's not happening. The worst option would be to go to Netflix. The less terrible option, but is still a bad outcome, is to go to Paramount. But you would rather a company who is much more focused on actually filling the cinemas with good content, rather than putting it out there for however long they plan to fill then their streaming service like Netflix. It's going to be crazy. It's always going to be messy. We've talked about that, and it's going to continue to be interesting. But let's see what actually happens now. Will Netflix re-up with a better offer? What is Warner Brothers actually going to do? Is this saga coming to an end, or is it just going to drag on and on and on? We're about to find out, I guess. So with that, I shall leave it there for this one. So do like and share and subscribe and hit the hype button and all that good stuff. Cheers, and I shall catch you in the next one.